Hello everyone. Welcome to Smart Money Tips. My name is Mary. Thank you so much for stopping by today. Thank you for supporting the channel. On this channel, we talk about finance and banking, and we learn about various ways to make smart money decisions. In today's video, we're going to talk about basic banking tips for international students, newcomers, and everyone else can also benefit from this if you're new to the Canadian banking system. So let's get right into it. The first thing we're going to talk about are some ways to save on fees, on banking fees for your checking account, saving account, and also your credit card. We will start with the checking account. The major fees for the checking account will be your monthly fee. So for example, if you are a newcomer or you are an international student, the best way to avoid fees will be to shop around for banks that have international student or newcomer programs. So this will give you benefits of having unlimited transactions with no fee. For international students, you can have no fee banking for the duration of your program, and some of the banks also give you up to about 5 years after graduation. If you are a newcomer, you can have it for about a year's package. You have no fee banking when you have maybe checking account, savings account, and some investment banking with the same bank. So shop around for those packages so you are able to save on fees. Aside the monthly fees, there are some other fees that you can incur even if you have these international students or newcomer banking programs. One special fee is the NSF fee, which is non-sufficient fund fee. You incur this fee when there's a transaction in your account and you do not have enough money to cover the transaction. So for example, your phone bill is set up to automatically come out of your account at the end of every month. So maybe the 31st or the 30th of every month, your phone bill comes out of your account. And for some reason, you did not have enough money to cover the payment. So depending on how much balance you have in the account, there are two instances that can occur. One is the bank might allow the transaction to go through, which means you had some money available, but it wasn't enough. So it was like with maybe $5, $10 to make the full payment, and the bank will allow this to go through. In this instance, you will not get the NSF fee, but you will get an overdraft fee, which could be about $5. But where there is no money in the account and you get the NSF fee, what happens is your payments will also be declined. So your phone bill or your rent or your insurance payment will be declined, and the bank will also ding you for that. And this fee can go as high as $45. So some tips to avoid non-sufficient fund fee. One is to set up alerts for yourself. Some banks give you the option to set up alerts. You can have an alert for when your account goes below a certain amount. So you can set an alert. So alert me when my balance goes below $10 or my balance goes below $50. Or you can set up alert for any pre-authorized debit that you have. So the bank will alert you, oh, this payment is coming due on this day. So you make arrangements. So you can set alerts with your bank, or you can set reminders for yourself on your cell phone. That is what I do. I set reminders and I set them a day before the due date for my transaction. So I set alerts for my credit card payment, my hydro payments, my insurance payment. I set alerts for all those, and then the day before they are due, I go into my online banking and I make the payments. This way, I make the transfer. I transfer money from maybe my savings into my checking account to avoid NSF fees. So you can do it that way, setting alerts, setting reminders for yourself to avoid non-sufficient fund fees. Another way to avoid non-sufficient fund fees is to set up overdraft protection for yourself. So you have overdraft protection on your checking account. So overdraft protection is like a loan. It's not a high balance. I know some can go as high as $4,000, but it could be maybe $200, $500, $1,000 on your checking account. Is a loan the bank gives you, a short-term loan that only covers when you do not have enough money in your checking account. So if a payment is coming through and you do not have enough money, then the overdraft protection comes in and you pay a fee for the overdraft protection. There are different fees, so you have to check with your bank what type of fee you have, and when you're signing on, you decide which fee you choose. So it can be pay per use, it can be monthly fee, and this can be about $5 or $10 depending on the bank. So you can set up overdraft protection, but you'd have to apply and qualify before you can get the overdraft protection. Another fee to avoid in your checking account is the ATM fees. So this happens when you use another bank's ATM to withdraw money from your account. So let's say you bank with CIBC, you need cash, and there is no CIBC close to you, so then you end up using a Scotiabank ATM or a TD ATM. TD, Scotiabank will charge you for using the ATM, and this can be about $3 or $5. So the more you use a different bank's ATM, the more you pay unnecessary fees. So to avoid this, try as much as possible to use your own bank ATM. Or another way is to do e-transfers. So maybe you are sending money to somebody. Instead of withdrawing cash and giving to the person, you can use e-transfer, which is electronic transfer, or Interact e-transfer. That's the name for it, Interact e-transfer. So most newcomer programs and international student banking programs have unlimited e-transfers. So this is a free service that is part of your banking program, and you do not have to pay for it. So instead of using ATM, you can use e-transfers to avoid the ATM fees. So now let's go into the savings account. So savings accounts can also have fees. Even though the account itself does not have a monthly fixed fee, it has transaction fees. So even though you are enjoying unlimited transactions on your checking account, you will have to double check with your program to see if it covers your savings account, because some of the programs do not cover the savings account. The savings account fees will be by transaction, and a transaction is anytime money leaves your account. And this could be as high as $5 per transaction. So to avoid fees in your savings account, one, try as much as possible to not link your savings account to your debit card. So that is one option, but that can be very restrictive. So in situations where you have your savings linked to your debit card, do not make purchases from your savings account. So let's say you go out to buy groceries, you buy coffee, do not pay from your savings account. Always transfer the money from your savings account to your checking account and pay from your checking account. So to avoid this, it's very, very recommendable that you have your bank's mobile app on your phone. This way you can easily check your balance before you make a purchase to make sure you have enough money in your checking account. If you do not, you quickly make a transfer to cover the payment before you buy. That way you're going to save yourself a lot of trouble. So be very careful. Check if your banking program covers your savings account. If it does not, always transfer money from your savings to the checking. Never buy directly or make a purchase directly from your savings account. Let's go into the credit card now. So there's some fees with the credit card, yes, and there are ways to avoid those fees. So some of the international student packages or newcomer packages will give you no fee credit card. So this is very important. Not all credit cards have no fees. So you would have to double check. When I say no fees, I mean the annual fee. Double check the type of credit card you sign up for. Make sure it has no annual fee. If it has no annual fee, that is good. So you're not going to be paying any fees at the end of the month, at the end of the year, sorry. But then there are still other transaction fees that can occur in your credit card transactions. One is balance transfer fee or cash advance fee. So they are almost the same. This is when you take money directly from your credit card. So always try and avoid withdrawing money directly from your credit card. Do not put your credit card into an ATM and withdraw cash. When you do that, it is counted as cash advance. And this has a fee, which could be about $5 or $10. And also the money that you withdraw has interest, and the interest is charged as soon as you withdraw the money. So you're going to be paying daily interest on that balance until you pay it off, which can be very high because interest rates on credit cards could be as high as 20.99% or 22.99%. And you do not want to be paying this because this is a very easy way to accumulate debt, and that is something that you would want to avoid. We will talk about ways to avoid debt, more into details about credit card usage in a different video, so you can check that one out too. But today we're just talking about the basics, things to avoid, how to use your credit card. So use your credit card for most of your purchases because most of the credit cards are reward based. It could be cashback, it could be points based, and the more you use the card, the more you accumulate points or cashback that you can redeem for other stuff. So the cashback ones, you get money back, and it could be percentage. So it could be maybe 2%, 0.5%, 10% cashback on the card, depending on what type of card it is. You can get money back. It could be deposited directly onto the credit card or into your savings account. The points based, you could get maybe $1 equals 1 point, $1 equals 5 points, depending on the card. And the more you use the card, you accumulate these points, and it could be used for buying stuff. So for example, the Scotiabank Scene Visa card gives you points that you can use at Cineplex, which is a movie theater. You can watch free movies. You can also use the points at restaurants like Swiss Chalet, at Kelsey's, so you can buy food with the points. The RBC card also has some points you can use to buy gas. And some of them, the CIBC Aventura card gives you points that you can use to buy airline tickets. So depending on the credit card, there are different points or rewards that you can enjoy. So keep using your card. But one important thing to note is to make your payment on or before the due date. So you have your credit card statement. Try to make your payment before or on the due date to avoid interest. So if you make your full payment, the full statement payment on the due date, there is no interest. But if you make only the minimum payment, then the interest, which I talked about earlier, which could be 20.99 or 22.99, will come in. So then the balance, you're going to be charged interest on it. So as a newcomer or as an international student starting out, my advice to you is always make sure before you use your card for a big purchase, you have the money to pay for it, so you do not accumulate debt and do not accumulate interest on the debt, which could hurt your credit down the line. We would also talk about your credit score, how to build your credit for future big purchases like a car loan, a mortgage, and other stuff. So today, this is just the basics. To wrap up, we talked about how to avoid some basic banking fees on checking account, savings account, and the credit card. Be sure to join us next time as we talk about other programs. We will go into deeper and talk about best international accounts for international students. So join us on that one. Thank you so much for joining us and listening to us. We really appreciate you. If you have any comments or any questions for us, please drop them in the comment section. If there is anything else you would want us to make a video about, also put those suggestions in the comment section and we'll get back to you next time. Thank you. Have a blessed day. Stay safe.